This is One-on-One. We're joined by John Dawidowski, who is the CEO of the Healthcare Employees Federal Credit Union. Good to see you, John.
Good seeing you, Steve.
You know, we've talked about credit unions before here, but I'm curious, the Healthcare Employees Federal Credit Union, what is that?
We were formed to address a population here in New Jersey, which we were formed through the New Jersey Hospital Association.
That's through Betsy Ryan, the Healthcare Hospital
Correct.
Association?
Correct.
What does that have to do with Hospital Association?
Well, we have a charter that includes all those members, all those employers that belong to the New Jersey Hospital Association.
Right.
So it enables us to reach the employee base of those institutions.
To do what for them?
Basic financial services that you would find in a bank.
So here's
low-cost, nonprofit financial services.
Low-cost, nonprofit financial services. So I've been thinking about this. Describe who these hospital employees are. I mean, do they run the gamut?
They sure do. It's basically an entire economic profile of a typical hospital set of workers, anywhere from making minimum wage up to the CEO level, and everything in between, different levels of education, socioeconomic background. So
think about this for a second. Hospital workers, the other thing I've noticed about hospital workers is that they have crazy hours.
They sure do.
Right? So hospitals run, think about it, folks, they run 24/7. So if someone's got the midnight to 8 shift, is there a midnight to 8? I don't even know. Is there
11 to 7 is
okay,
the
thank you for correcting me. So it's 11 to 7.
Mm-hmm.
So that person who's working 11 to 7, that nurse, right, he or she is, you know, that's when they are. So that's when they're working. So then how do they take care of their financial business?
Right. Well, we have a number of different ways that we deal with it. We have one office that serves approximately 20,000 members throughout New Jersey. And we've designed our services to be more self-service centered, but we also
What does that mean, self-service centered?
We have internet banking, we have no surcharge ATM alliances, we have shared branching programs, so we have affiliations with other credit unions around the state, so our members can go to literally, say, 50 or 60 different credit union sites around the state.
But don't you actually go to the hospitals themselves?
Yes.
Actually, why don't you show some pictures of your team actually going to the hospitals?
Sure.
They're there, out there doing their thing?
We have 2 full-time field reps, and that's what they visit. We have about 300 employer groups that we deal with in the state of New Jersey, hospitals, nursing homes, visiting nurse associations. But here is an example of what we would do. If it's an 11/7 shift, our reps would be there when those people get off their shift after 7 o'clock in the morning. And typically that group is neglected to some degree when it comes to benefits and meeting different providers of services for employee benefits. So we want to make sure that we're there for all those different shifts.
I was thinking about the mortgage crisis.
Sure.
2008?
Yep.
So the mortgage crisis hits, right? The world changes for so many people.
Mm-hmm.
How does the world change for credit unions? And then the impact it disproportionately, I don't know, has on hospital workers, but take it a piece at a time. Mm-hmm. The mortgage crisis happens. What happens to credit unions?
Well, there was a couple of things that happened to the industry.
Overall?
Overall. The groups that handled the banking services for credit unions, sort of the bank for the banks, the corporates, they had some severe problems with mortgage-backed securities that were basically subprime loans that were collateralized mortgage obligations.
And the subprime loans were the problem.
Exactly. And so that forced a lot of those corporate credit unions that were holding those investments, they became underwater, and the National Credit Union Administration Insurance Fund basically came in and rescued that segment of the business, and then in return they assessed the credit unions around the country to subsidize that rescue.
But is it fair to say, help us understand this, John, is it fair to say that some people got credit mortgages who in retrospect never should have gotten them?
Sure.
Who shouldn't have qualified.
Right.
Who were really bad risks.
Exactly.
And then the fallout, if you will, is what? Money's tighter?
The credit is tighter, for sure. Banking regulations have changed. Underwriting guidelines for mortgages have certainly changed. Things that were prevalent back, from 2000 to 2007, no income documentation, 100% loan to value, no down payments.
Whoa, 100% loan to value. I don't know what that means.
Basically, you didn't have to have any money down on the mortgage. In fact, some of the creditors out there were doing 105%, so you can actually borrow, your settlement costs. And so it became a system of there were a lot of speculation industry driving up the prices of real estate, and people were continuing to buy, thinking that they can stay in the home for a few years and then make a profit and then get out, and all of a sudden.
So all these regulations happen, and finally, before I let you out of here, the ultimate impact on credit unions and your ability to serve your customers becomes what?
It hasn't really affected.
Has not.
Has not. No. As an industry, we always had very strict guidelines in terms of underwriting loans. We were never into subprime mortgages and those kind of things. We've always had, our particular credit union and most of my colleagues, we've always had fairly prudent underwriting standards. So you had to have income documentation, you had to have a down payment, you had to qualify, you had to be able to afford the property.
Before I let you out of here,
Sure.
How did you ever find your way into a credit union?
That's interesting. I started with the Hospital Association in the insurance and benefits area, which was kind of like a group type
Sure.
of program. And I found out that the Illinois Hospital Association was developing a statewide credit union. I approached the management team at the Hospital Association back in 1982, I think it was, and said, I think this could be a great benefit for our members, our hospitals and their employees. Did a business plan, and we started in 1984, and this is our 30th year in business.
And the demand, you'd say right now, describe it.
People trust credit unions. They know that we're there for the long haul. We're not there to make a profit like a typical bank would on every transaction with fees and different things. We're a nonprofit institution. Our members that make deposits in the credit union own the credit union, so they're the shareholders. So there's no motivation for us to pay someone outside dividends and like a typical stock-held bank might be.
John, thank you for joining us and breaking down this very important issue that affects everyone, particularly as it relates to these healthcare and hospital workers. Thank you, John.
Thank you.
Appreciate it.
Okay.
One-on-One with Steve Adubato has been a production of the Caucus Educational Corporation, celebrating over 25 years of broadcast excellence. Funding for this edition of One-on-One with Steve Adubato has been provided by New Jersey Credit Unions, the Robert Wood Johnson Foundation, MD Advantage Insurance Company of New Jersey, PSC&G, the law firm of Gibbons, PC, Activus, in cooperation with the American Medicine Chest Challenge, and by Cone Resnick. Promotional support provided by the Star Ledger, powering NJ.com, and by NJ Biz, all business, all New Jersey. Transportation provided by Airbrook Limousine, serving the metropolitan New York, New Jersey area.